Home prices across the Boston, Massachusetts housing market have continued to increase over the last year. However, could 2024 finally be the year where we see prices start to drop? Well, if we take a look at home value growth around Massachusetts over the last year, you can see that we have some pretty impressive figures, particularly in Middlesex County. Prices are up 8% year over year. In Norfolk County, they're up 7% year over year. While in Suffolk County, in the center of Boston, they're only up 2% year over year and are actually quite a bit lower than they were 2 years ago in certain zip codes. And really, the fundamental driver of these increasing prices across Boston and Massachusetts more generally is a lack of inventory. When we switch the data point on this graph to something called inventory surplus or deficit, we can see that there's a huge shortage of housing all across Massachusetts, particularly in some of these Boston suburbs like Essex County, north of Boston, heading into New Hampshire. 40% lower on inventory than normal. There's very little homes on the market, very few homes for sale, which is why prices have continued to go up. Similarly, in Norfolk County, inventory is down 34%. In Middlesex County, it's down 23%. In Worcester County, inventory is down 41%. And so, folks, these record low inventory levels are what's ultimately causing prices to continue to go up in Massachusetts, even though values are very expensive and people really can't afford houses. So this is kind of the interesting dynamic we have at play in New England, Massachusetts, and Boston, is that the affordability is terrible. The number of home sales and buyer demand is actually very, very low. Buyer demand in the Boston area is at its lowest level in 20 years. However, we haven't seen the prices drop yet due to a shortage of new listings and inventory. So the question is, if you're a buyer and investor looking in this area in 2024, is are we going to see more listings? Are we going to see more inventory? And will those home prices finally start to drop? And I got to tell you, folks, home buyers in Massachusetts definitely need some relief. As you can see, the typical value of a house in Massachusetts is $586,000. That's just a standard house across the state. That's not even a nice house. It's just a standard house. And you can see this makes Massachusetts the third most expensive state in America to buy a home after California in Washington, D.C. Now, interestingly, you can see most of these expensive housing markets have been not as good on appreciation over the last year, except for Massachusetts. Home prices in Massachusetts are still up 7.7%. One has to wonder how long that can continue for, everyone, because home values in Massachusetts are 16.5% overvalued compared to the long-term norms. And that suggests that we're going to see prices stop growing and start to go down at a certain point. But let me show you guys what I'm talking about here with overvaluation rate. Typical home value in Massachusetts is $586,000. The fair home value, based off what the income levels in the state, is $503,000, which means 16.5% overvaluation. You can see this is the highest level of home price overvaluation in Massachusetts since 2006, right before the last downturn, where home prices actually became undervalued in Massachusetts all the way through 2020. They were undervalued or fairly valued for a while. Now they're a bit overvalued, suggesting that we're going to have some price downside or that prices are going to stop growing and wait for incomes and wages to catch up. Now you can see that Massachusetts actually isn't as overvalued as a lot of other housing markets in America. You can see there's certain places like Idaho where prices are 33% overvalued, or Florida where they're 30% overvalued. But nonetheless, prices in Massachusetts are still very, very expensive, particularly in an area like Boston. Boston is, let's just call it, an economic powerhouse in America. It has a super diversified economy driven by the universities like Harvard and MIT and Boston College, driven by the hospitals, driven by the tech scene with the biotechnology. Boston also has a big finance scene, so there's a lot of diverse demand drivers really propelling that economy forward, while there really isn't too much of an increase in supply of new home building. Boston is pretty filled out in the urban area. In the suburban areas, they have pretty strict zoning laws. And as a result, the building permit rate in the Boston metro is 0.2% per year. And let me just explain what I mean by that. The building permits over the last 12 months in Boston registered 11,700 units based on a population of 4.9 million in the metro. That's 0.23%. This is very, very low, 0.23% in terms of relative building. And you can see kind of historically, Boston has just always had fairly low building. Now, just to give you some context here, if we were to go down to an area like Charlotte, the building permit percentage is 1% of the population. Literally 5 times as much home building in Charlotte. There's almost 7 or 8 times as much home building in some housing markets in Florida. And so that lack of building is ultimately what's driving some of the inventory issues and the long-term higher prices in Boston. And if we actually switch this to the county map, we can see also this lack of building extends into Massachusetts. Like Worcester's building permit percentage is only 0.16%, very, very low. Hamden County, which is where Springfield, Massachusetts, building permit percentage is 0.06%. They only built 288 housing units on a population of 461,000 in and around Springfield. So these low building permit rates are ultimately why, if we switch back this data point to the inventory deficit, that we could see very low inventory levels. And this is something that in the long term is likely to keep upward pressure on prices in the Boston area, in the Massachusetts area. Not to say that there won't be a correction. I do believe there will be a correction over the next year or two due to the overvaluation. But in the long term, right, over 5 years, 10 years, 15 years, I'm not seeing a way for there to be a major crash in Massachusetts given the lack of home building that exists in the state. But of course, everyone, the one thing that you got to understand as a buyer and investor is that there's big differences within cities and neighborhoods. This is something that the more I study the housing market and the more that I use this tool that I created, Reventure App, which you guys can also use this tool showing all the data in this video, the more I look at how different neighborhoods are performing so differently in this housing market in 2024. And so if you're an investor, a buyer, or a realtor, you have to understand not only what's going on in your region and state and county, but what's occurring in your zip code. Because if we zoom in actually on Boston and look at the different zip codes, what do we notice in terms of inventory? Still looking at this inventory surplus or deficit, we can actually see that there's lots of inventory kind of in urban Boston, in Back Bay, in the Seaport, in Roxbury, up in Cambridge and Harvard University. There's actually lots of inventory. Like in this zip code that covers Harvard, there's 38 homes for sale currently, which likely include condos as well as some single family homes, compared to a long-term average of 17. So we actually now have had a big increase in inventory and listings in the zip code, suggesting that maybe we'll see some declining prices. The Reventure App home price forecast score says that for this zip code in Harvard, covering Cambridge, prices could go down over the next 12 months. But if we head back to this map and zoom out, what do we notice is that the more we zoom out from Boston, the more that we could see blue on this map in the suburbs, which means an inventory deficit. So while we have more homes for sale than normal here, we have way fewer homes for sale than normal here out in the burbs near like Framingham. Like in some of these zip codes, everyone, inventory is down 71%, 78%. Take a look at this. In 02030, before the pandemic, we had 42 homes for sale in the market. Now we have 5. I mean, look at that, everyone. We went from 40 homes to 5 homes for sale. So long as there's only 5 homes for sale, I mean, we're not going to see prices drop meaningfully, right? This means that there's a shortage, which is why the Reventure App home price score in this area in suburban Southwest Boston is at 64, suggesting the prices are still going to increase into the future. And ultimately, everyone, this isn't an exact science predicting where prices are heading. However, if you're a buyer and investor, you can feel much better about the decision you're going to make in 2024 and if you should buy or wait by looking at this data and having a more fundamental understanding of what the real trends are. Like, if there's no inventory for sale in your zip code, it's realistic to expect that prices will stay flat or go up. Conversely, if there's lots of inventory for sale, if there's a huge surge in listings and buyer demand goes down, more realistic to expect that prices are going to go down. And that knowledge is very powerful in helping you inform your decision-making process. The other thing I want to call you guys attention to here also is the levels of overvaluation. This is another really interesting thing going on in Boston, is that, overall, we're not that overvalued in Boston. We're around 15, 16% overvalued. But actually, in the urban area, we're actually undervalued on some of these housing markets. In Fenway, in South Boston, we're 13.6% undervalued. Now, the prices here are still expensive, but they're cheaper than they used to be relative to income. And let me show you guys what I mean by just looking at South Boston real quick. You can see that the typical value of a house or condo or multifamily property in South Boston is $815,000. And you can see actually that hasn't grown that much over the last 4 years. Like, there was a big increase in value from 2012 to 2019, which is actually about when I lived in Boston. However, since then, it's kind of flatlined while the median household income and the gentrification in this area continues. The median household income is $154,000 in this zip code, meaning that the home value to income ratio, the measure of affordability, is 5.4. Home values are 5.4 times income, which is actually below the long-term 20-year average of 6.2. And so if the value to income ratio is below the long-term average, that suggests a market that's actually historically undervalued. Now, what do you do with that information? Well, I would say if you're someone looking to buy in Boston, if you're an investor, maybe if you're looking to buy in that zip code, it should give you more confidence that that zip code is going to hold its value a bit better or could even appreciate more into the future. With the reason being that the income levels locally are high enough to support the prices. Now, conversely, if we look at this overvaluation rate in some of these far out suburbs like Scituate, everyone, we can see we're 31% overvalued out in Scituate, which is often like a second home vacation destination. A lot of people moved here during the pandemic, got out of Boston. We can see that because of that, the values in Scituate went from 587,000 to 881,000. So exactly like the opposite of what happened in South Boston. Scituate really wasn't performing that well before the pandemic and then performed really well during the pandemic. Now the values are at a place where the incomes don't support it. So the median household income here is 135,000. It's above average, but it really hasn't grown, meaning that the home value to income ratio has now spiked to the highest level on record, suggesting overvaluation and that prices could drop. Now, in the short term, I don't think prices are going to drop here because the inventory levels are low, the days on the market is low, and so as a result, in the short term, prices might still go up. However, in the long term, buying into an overvalued market leaves you at greater risk of price declines. And I just performed that analysis on two neighborhoods in the Boston Metro, South Boston and Scituate, but you can perform that analysis I just did for yourself if you go to Reventure App, www.reventure.app. Head there right now and type in your city. In this case, it might be Boston or any other city in America, actually. Reventure App has data for every city in America. And start looking at the trends in home values in your zip code so you can get a sense of where the market has been heading and take a look at some of these home price forecasts for these different neighborhoods so you could see if prices are likely to go up or down into the future. But really, if you want to do a deeper of a level of analysis, I would recommend signing up for a premium membership and accessing data points like overvaluation rate, inventory surplus, the price cut percentage, population growth. It's definitely useful to know how much the population is growing in your zip code or area, especially if you're an investor looking for the long term. Accessing these data points is going to help you better understand the trends in your market and whether it's a good time to buy in 2024. Additionally, you can use the tools on Reventure App to search for new cities and zip codes that you might not have considered previously. So head to www.reventure.app right now and then sign up for a premium account. The cost is $39 a month and it bills on a monthly basis. The great thing is that you can cancel it at any time. So if you sign up and do the research for a couple months and no longer need it, you can downgrade to a free version.